Ramesh Swaminathan, President and President Finance and Planning with Lupin Pharma. Ramesh, good morning and thank you for joining us. Ramesh, let me start with the hard part first. I normally start with the easy part first. And the hard part is right now analysts are a bit confused on what's going on in the US generic market. And when it comes to Lupin, after Fortimet and Glumedza, everyone is of the view that your profitability and your margins will come under pressure.
Let me talk about Fortimet and Glumedza because we mentioned that. But isn't this characteristic of, in fact, this industry itself? You have huge upside on launch, and then there is downside. In the case of Fortimet, it did last for a pretty long time. We are still hopeful that it will last because we're still talking about Mylan, which is going to be the second entrant in this field. So it's not as though the market shares are going to diminish tremendously for Lupin. Glumedza, we do think that there is going to be a downside with, in fact, entry from possibly two other competitors. One talks about Sun and Actavis over time. So there would be a downside from those. But I would still draw a lot of comfort from the kind of products, the entire pipeline that we have. We have made about 338 filings in the U.S. between Lupin and Gavis. That's a 100% subsidiary out there. 192 have been approved. 110 odd products have already been launched. We're speaking about 70 to 80 to come from within the approval space itself. And we've got another 140 odd products to be approved over time. I also draw a lot of comfort from the fact that our paraphos are close to about 149, which might not mean anything at all, but the fact of the matter is that first two files, we have perhaps the highest contingent from the industry at about 45, 37 from Lupin, 8 from Gavis, of which at least 25 are going to be exclusive to Lupin. So you would be looking forward to at least one or two good launches on an annual basis. So where is this concern coming from, really?
I'll tell you where the concern is coming from. If I look at the footnote of the analyst call, and again I'm quoting some analysts without getting into a specific brokerage here, they are of the view that the US generic market is getting very, very competitive. Yes, US FDA is one problem, but the general concern is that there is going to be a downtick in the generic prices. Is that a real concern or that is just a cyclical concern?
Well, in the past, if we speak about inline products, they have declined by about 5 to 6%, and that's the general trend over time. But last year, you did see an unprecedented 14% decline. That is more because of channel consolidation. You speak about intensifying competition. To the contrary, I actually have some other information. The number of DMFs filed for, in fact, the products that we're going to launch over time. In fact, I see the competition coming down from what used to be about 12 to 13 DMFs. It's now coming down about 6 to 7. It actually means that a lot of these recent measures, because of the fact that there is going to be a lot of complexity in the business itself, and the very fact that the US FDA has been a lot more stringent, there are a lot of people who are actually falling away. So I would think that this is a measure where which kind of saves the men from the boys, really. So to the direction, I think there is of course going to be competition, but it's going to be for molecules which are going to be pretty, and for molecules where it's going to be complex, it's not going to be that. I think the intensity would lower, especially in kind of areas that are getting into. And here I could speak about the respiratory portfolio, the complex injectables that we're getting into, and so on. We have made some good progress. The respiratory portfolio that we have, we believe that it's going to be the best in the industry at some stage. And we speak about complex injectables from our nanoization technology, the micronization technology that we developed with our facility at Amsterdam. We are speaking about Risperdal Consta, aripiprazole, dalperidone, leuprolides, and the like. All of this will certainly contribute heavily over time.
Ramesh, good morning. Neeraj here. The other concern that the market may have is growth. Now, the reason I'm saying this is analysts say that 50% of your profits dependent on Glumedza, Fortimet, and Ministrin. With Glumedza gone and Fortimet going anytime soon, people believe that FY18 could be a year of no growth. Now, how would you respond to that observation or a comment?
I think the truth is far away from that. There is going to be growth because last year we didn't have Gavis. What we captured is essentially 20 days of sales for Gavis portfolio. We have the full year this year, and that's going to actually add tremendously to the growth itself. And even this year, it's not as if we don't have any molecules to launch after, in fact, Glumedza and Fortimet gets phased out over time, and it's not going to be imminent again. It's going to be over the next couple of quarters. It's going to come down. It's not going to be again phased out or anything of that kind. And we have products like Ministrine and so on coming on. So to the extent I think there is going to be good growth in the American markets.
Right. So, just to put the record straight, because the market is so worried about this launch by Mylan, and given the fact that it's coming in from India, so, they would get those cost benefits too. You do not see it impeaching essentially your presence in the US.
I'm not saying that it's not going to impact. It is certainly going to have an impact, but I'm not saying it's. I'm only saying that it's not as though everything is lost for us. There is, the very nature of this industry is there is going to be a phasing out of products that we launch, but there is more to come from our pipeline. So it's only a question of time before we have newer products which will replace, in fact, Glumetza and Photomet.
Ramesh, what is your understanding with US FDA? I mean, the fact that some question marks were raised about your manufacturing facility, do you think that could have an effect on your new approvals?
We're cautiously optimistic on that. So if you're speaking about the Goa facility, so we had this inspection last year for which we received the EIR, about a month ago. The second inspection, of course, is still open. But we have been receiving, in fact, approvals, tentative approvals relating to that facility. We have made our representations to the authorities. The senior management went and met with them also. So we are cautiously optimistic about the way it is going to go ahead.
When I speak to independent consultants, they have the nicest things to say about the Lupin manufacturing practices. So for a company which follow world-class manufacturing practices, how come there was a US FDA problem? Do you think those were minor observations, more like an oversight, and you're confident of sorting them out?
The only thing that I can say at this stage is there was no data integrity problems. So the questions of any import alert or anything of that kind is never there. These observations are more procedural and actually relate to, in fact, SOPs and the like. I would not like to comment about the seriousness or anything of that. So we take everything that is being said by the authorities very seriously. We have done what it takes to kind of to remedy the situation, and we still are working on it. We made our representations to the authorities, and we are cautiously optimistic about getting this resolved as early as possible.
The other key concern is clearly growth and the triggers for that. Now, I know you've said that there are a lot of products in the pipeline, so you have enough ammunition to tackle the markets and generate more additional revenues. But analysts say that more than 50% of your profits, because are dependent on these three drugs, that there would be a concern on diversification. You do not think that that would be valid right now?
I don't think so. I think the pipeline is very rich for the next 3 years to come, and we've still got a lot of filings to come from the respiratory space, from the complex injectable space, derma space, and the like. So we are fairly confident of the next few years, so to speak. And I think Lupin is also diversified into other geographies. So we're speaking about growth coming in from other parts as well. We got a presence in Japan. We just bought into, in fact, tail-end brands in Japan, which is going to help in augmenting further growth out there. The markets of South Africa, Philippines, etc., are doing very well for us. We've got a good strategy coming up for, in fact, Europe as well, including respiratory and the like. So fairly confident about so what we're speaking about when you speak about Lupin, it's all about secular growth across various geographies. India continues to do pretty well. The first quarter was perhaps a blip in the whole thing, but we do expect, in fact, the long term India to do about 15 to 18%. If the GDP is going to be about 8%, I think the healthcare industry would do about 12%. And in the past, we've done close to about 1.5 times that of the industry itself. So I think 15 to 18% is quite possible in India. So we've got growth across various markets. It's not as though we're dependent only on America, though I do recognize it is indeed a very significant contributor to our overall financials.
Ramesh, we'd appreciate. It's great to do this call with you and iron out all the concerns. So don't think we are only picking at you, but it's great to get all of these answers for the benefit of investors and viewers. So, am I okay? Let me just ask you: do you think margins will contract because of all that has happened, or the neo products that come in will help you mitigate any kind of margin pressure for FY18?
This talk about contracting margins, I've been hearing about it for quite some time. And to the contrary, there has actually been, the margins have actually been rising only. If you look at the historic past, we have grown from, in fact, 14% into last year was close to about, we reached a high of 33, but to see it since then, even the first quarter, the overall margins are pretty good, despite the fact that there has been a higher quantum of R&D spends. So the way I see it is margins should continue to rise over time. And it's actually a resultant from, in fact, the kind of products that we launch in the markets, the kind of operational excellence measures that we take to kind of contain costs on the manufacturing front. And the residual is essentially a function of, in fact, how much have we invested ahead of the curve. And we do invest ahead of the curve for quite a few things. R&D is one piece, but there's a lot of things that we do on for Salesforce, for in fact setting up production facilities which have not actually been commercialized as yet, spend on bio and so on. So all of these are going to be, in some sense, going to retard, in fact, progress on the EBITDA front. But if you look at a span of 5 years, you would actually see there is going to be tremendous growth in EBITDA margins over time. For sure, there is going to be tremendous growth.
Okay. Ramesh, let me get closing comments from you. A couple of years ago, the management of Lupin had indicated their vision 2020. They had given an indication on when Lupin could be a $5 billion company. So any reason for me to believe that their vision statement has changed? The vision statement was announced when these FDA problems, the margin problems were not there. So any reason for me to believe that your internal targets could extend by another year or by another 18 months?
The $5 billion target is always an aspirational statement. And that always included a component of, in fact, inorganic strokes as well. This analyst call in May, we actually came about saying that we are speaking about a target of close to about $3.5 billion on the organic front, with a lot of it actually coming in from the pipeline that we've already put in place. And inorganic, the pursuits would certainly continue. There's a lot of capacity on our balance sheet to absorb more debt. And specialty assets have come down in prices by about at least 40%. So we're looking around for assets which are appropriate to our own strategy. So we still feel that there is going to be tremendous growth coming in both from the organic as well as the inorganic pursuits that we would be pursuing.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.